Let's talk about inflation. We've talked about it on this program. You've talked about it elsewhere quite a few times. But this week we had the Council of Economic Advisors put out a blog post, a fairly long essay that I'm not sure, but I think it might have been responding to you. They think we don't have a long-term problem. What do you say?
I read the CEA analysis pretty carefully. I can't say it put my mind at ease. Here are some things it didn't talk about. Didn't talk about the housing market on fire more than any time since the statistics were being created. Didn't talk about all the employers who reported that they were having difficulty finding labor, or the fact that the vacancy rate is already back to normal levels. Didn't talk about the purchasing manager surveys, which show things to be in unprecedented territory. Didn't talk about the largest one-quarter movement upwards in 10-year bond yields in decades. It didn't talk about the consequences for inflation psychology of a change in the policy regime away from preempting inflation towards preempting the idea of doing something about inflation. It argued that there was going to be a variety of transient factors that would lead to high inflation now. It's right about that, but that's a little bit like arguing that we're about to have a blizzard, but that doesn't mean anybody should worry about how bad the winter is going to be. So there are no certainties, and God knows economists aren't very good at forecasting inflation. But if you look at the overheating economy theory of inflation, it looks like we're headed towards an overheating economy. If you look at the monetarist theory of inflation, money aggregates are growing at unprecedented rates. If you look at the fiscal theory of inflation, we're in an unprecedented fiscal experiment. So it certainly didn't convince me that one should be relaxed about inflation. And David, I have to say that the frequency with which people return to this argument and debate suggests to me that there is a certain amount of discomfort and concern out there. But we'll see what happens, and I don't think we'll know for 18 months or so what the consequences of the experiment we're engaged in are. But so far, nothing's happened that has given me any reassurance. And if anything, the flow of the numbers has been more rapid than I would have expected, and more cause for concern.
Yeah, it certainly looks like you've hit a sore spot there. There's a lot of reaction to what you had to say. At the same time, we also hear from Federal Reserve officials, including Jay Powell, the chairman, and he keeps coming back to a point that they do make in the Council of Economic Advisors essay, which is there are long-term, at least decade-long forces that are large headwinds against inflation. Those include an aging population, they include technology, they include globalization. Will that keep us away from an unmoored inflation?
Maybe, but those kinds of structural forces have more to do with the level of prices than they do with the rate of inflation. It's the basic law of economics that when things are in short supply, they tend to go up in price, and to go up in price more rapidly the shorter the supply is. And if you look at it, whether it's houses or silicon chips or restaurant workers or skilled managers, there are more and more things headed for very short supply. And I think that's going to make their prices and wages go up. And I don't see why Jay's structural factors change that basic logic. It may take a little longer. The timing may be a little bit different. But, you know, for the first time, David, since they started collecting the statistics, a majority of American homes that sell are selling above the asking price. That's got to be telling you that asking prices are about to soar. Now, we use a price index that doesn't pay attention to the price of houses in calculating the price of living in owner-occupied housing, believe it or not. We've got some formula involving something called owner's equivalent rental. But from a common sense point of view, the idea that housing is dragging down inflation surely must seem absurd to most Americans, and it can't be the way it's going to be for a very long time, given what we're seeing.
Larry, let's talk about growth. We've long heard about how delightful it is to have global synchronized growth. Right now, it doesn't look like we're headed there. We have asynchronous growth. We certainly have China doing quite well. The United States apparently is headed, at least for a year or so, into pretty robust growth. On the other hand, Europe seems to be lagging behind, and then don't even get me started about some of the emerging markets. They seem to be really suffering quite a bit. What are the risks in that kind of asymmetry in the global economy?
You know, to paraphrase Dickens, we may be headed for a tale of two worlds between the U.S. and China on the one hand and large parts of the developing world on the other. I heard a debate the other day, and it's the most depressing debate I've heard in a long time, about whether when you look at Latin America and Africa and even parts of India, you're going to be looking at a lost decade or you're going to be looking at a lost generation. We just have not seen remotely the kind of boldness and imagination that we've seen in responding to this with monetary and fiscal policy for the rich countries like the United States in some of the poorest countries. And to have that kind of effort requires the international system to step up. And so far, it's really stepped up in a rather inadequate way. I think this is going to have huge political consequences for our security, not to mention the tragic consequences for millions, if not 10 millions of people.
At the same time, I can hear in my head some people up on Capitol Hill, I will say they tend to be Republicans, maybe not exclusively, who say, why is that our problem? You heard that in some of the exchanges with Janet Yellen, the Secretary of the Treasury, actually, over the SDR, the special drawing rights contest about the IMF, which basically, why are we helping out the rest of the world?
This is not a charitable endeavor. This is forward defense of our global interests. And look, I'm as worried as anybody about China. I'm as worried about anybody as Russia. But frankly, over the next decade, I think we've got more to fear from microbes than we do from Xi Jinping.
So let's wrap up this week with a lightning round here, as Summer says. Number one, let me ask you, do you think that we'll have a 10-year yield at 3% before we get down to 4% on the unemployment number?
It's a race. My guess is we'll get to the 4% unemployment rate first, because we'll get to it this year.
And secondly, there's a lot of talk about inequality, income and wealth inequality in this country. It's been great and growing for some time. A lot of people say we have to fix it, including Jay Powell at the Federal Reserve. If you're going to really address that issue, can you do it through fiscal policy or other means, or do you need labor law reform, such as President Biden is trying to implement?
I hesitate ever to use the word need, but I'll say this. We sure could use labor law reform in this country. I think it's something where we Democrats have not been aggressive enough for a long time. The impunity with which employers can break up union organizing efforts and fire union organizers with only a slap on the wrist is a national embarrassment, and it is something that should be changed very quickly.
And finally, Larry, you, of course, were Secretary of Treasury. Toward the end of the week on Thursday, we heard from the United States government they're going to impose new sanctions on Russia for that solar wind hack, as well as for interference in the election. And part of the sanctions were really specifically on Russian sovereign debt. From your experience, is that a gesture, or could it actually change Russian behavior? How effective is that sort of sanction?
I think it has some impact, but it's easier to be critical of sanctions than it is to identify an alternative. When countries do things that are sufficiently wrong from our viewpoint, and we want to do more than talk, and God knows we don't want to do anything violent, there's a tendency for policy to go to sanctions, and it's probably the best of bad alternatives.